Welcome. Let's get right into the stock market technical analysis. Guys, we're looking for trade ideas. We're looking for opportunities in the market, and we're going to use the charts to be our guide to show us where those might show up. Again, nothing on this channel is financial advice, and in general, everything is based on probabilities. I don't know where the market's going. Nobody knows where the market's actually going to go. We just have to read the charts day by day and then measure the probabilities. And then we have to manage our risk reward, okay? So it's all about managing risk once you find the probabilities are in your favor. So starting off today, we'll start off with the tech sector. Again, the tech sector's led the sell-off in the market over the last couple months. And I'm looking at the daily chart here on Triple Q's tech ETF. You can see we started that sell-off pretty much back here in January 4th, kind of a topping pattern throughout the part of 2021, and we are in a downtrend. So a downtrend is just making lower highs and lower lows, and you can see we are clearly in a downtrend. So again, a lot of people say trend is your friend. Well, let's stick with the trend that is down. Let's go that with that. We do have a bullish divergence on the daily chart on the momentum indicators. So that's one thing that we really have to watch, okay? These bullish divergences often show up at the end of a trend, all right? And they signal that a trend reversal is likely or probable. They don't give you an indication that, okay, it's time to exit shorts and time to flip long, but they do tell you that the conditions are there, all right? So that's it. Looking at the hourly chart here on Triple Q's, you can see we gapped down today. We're really chopping around the last few days, but I do expect some more downside. I am looking for one more leg down before these bullish divergences that are in play actually start to maybe play out. Or another potential is if we go back to the daily chart here, is we have that impulsive leg down and we burn through the divergences and make a new low in these momentum indicators. If we see that, I don't know if we will, but if we do see that, that's extremely bearish because it will mean that we had bullish conditions. We had that bullish setup on the momentum indicators, and they just didn't play out. They were burned through. So we'll watch for that. I don't know what's going to play out. The next level of support on Triple Q's, if we make that next leg lower, I would expect us to get down to about this 300 area. It's about 299 down to 300, somewhere right in there, right there. The other thing, bigger picture, is on the weekly chart, you'll see that the bull market trend in Triple Q is going all the way back to 2008. All right, this is over 10 years. And you can see there's your price channel on the weekly chart. Now in 2021, we overshot the price channel primarily due to the Fed. Okay, the Fed was in there just pumping money like crazy. Everybody knows that. So they caused the market to overshoot that price channel. I think it wants to go back to its price channel. So bigger picture, I could easily see the Triple Qs getting down to the bottom of the price channel. But zooming in on the weekly chart, you can see we're just battling it out right now with the top of that channel. So a couple weeks ago, we dipped below it. They stepped in and bought it up. This week, we've dipped below it so far. They've stepped in and bought it up. We'll see how the week closes. If we get that weekly close down here and we have some sort of impulsive selling, that is going to be pretty bearish. That's another indication that we're bearish. And we'll look for, once you enter the bottom of the channel, then basically what it means on the weekly chart is all this price action was a false breakout, and we're now heading down to the bottom of the channel. All right? That's where the probability would lie. If we fall back within this channel, the probability says we're going to go to the bottom of the channel. Okay, the S&P 500, there's not a whole lot going on in the S&P 500. I think the action really is in the tech sector right now, but if the tech sector starts to sell off, you should expect to see the broader market start to sell off as well. So I'm looking right now, we have a potential bullish falling wedge, kind of marked out. Here's the top, and then the bottom would be down here. All right, that's a potential bullish falling wedge. We also have bullish divergence. So you'll notice here, There's your bullish divergence on the momentum indicators. So it's kind of the same setup as the triple Qs. It's just moving a little bit less because you do have defensive stocks that are in here, and they're not going to sell off as much as those momentum stocks that are in the NASDAQ. Again, if we sell off and continue to sell off, the next level in the SPY that you'd want to watch for support would be about this 400. Okay, I see 400 as being there's a gap to fill, so I think we'll get a reaction there. Moving on to the small caps. So this is where some more action should take place. Again, small caps on the daily chart, big topping pattern here. We broke to the upside, made it look like we were breaking out to continue the upward trend, but that topping pattern came with negative divergence. All right, so we had clean negative divergence. That was intact. And that means basically that once we broke back down into this sideways range, it meant we were likely going to the bottom, which we did right here. Had one final reaction, and then we broke. All right, so we broke the channel. So we are downtrending. Now, recently, we've been kind of flagging out. It's created this bear flag, and you can see that, basically you can say the flag is something. Here's your flag pole, and then we've had all this flagging action right about here. And if we're going to continue to the downside, the measured target would be about the breakdown of the flag. Okay, so that measured target would put us down to that 170 area. So I still am thinking that's where we're going for this next leg lower. I would expect us to probably have a more sustainable bounce. I don't know if it's going to be a bounce to all-time new highs, but I think, bear markets, and we will be in a bear market at that point in time if we're down here. Bear markets have very strong rallies. And so we'll look to trade those rallies as well if they start to show up. All right, so that's all I see. Looking at the hourly chart, you can see we're kind of chopping around, still flagging out. No technical change, but we're still seeing selling pressure happen. And, the bulls have not been able to recover. So I'll keep an eye on that. But as of right now, we are in a downtrend. You can see clearly we are, moving down, making lower highs and lower lows. Okay, XLF. So XLF has been really battling it out with this 37 level. That's been kind of the key pivot point. And you can see we were holding support when we were above there, but we broke down the other day and we had a sell signal right there. I talked about that, saying that was a sell signal. Now, the last couple days we had a kickback rally. So we rallied back into the 37 and we've rejected. So far today, gapping down and starting to sell off. So look for that selling to continue. At this point, I really wouldn't want to see XLF recover that 37. So stop somewhere above this 37 area, but I would expect the probability tells me that we're going to continue to the downside. All right, we've got some support here at 35, and then we've got an ascending trend line down here, which falls about 34, depending on when we actually get down there. In general, that looks like more downside selling. And if you're going to see selling in the financials and you're going to see selling in tech, you should see selling in the broad market. Okay, let's follow up on some of these short trade ideas because in general, I'm looking for the market to sell off some more. And so we've got plenty of shorts going on. PANW. So PANW, if you look at the daily chart here, you can see, just to kind of reiterate the trade and why we're in this trade. Daily chart, we have an uptrend line on the daily price channel there. And then we had this big rally up here where we made a new high right up in here. But this high came with negative divergence. The momentum was dropping off on both the RSI and the PPO while we made a new high in price. So the probability way up here was that we were going to reverse and sell down. That's what we look for. So on the hourly chart, basically what we're looking for is a break of this really steep, this steep rip higher. We shorted the PANW right there. I believe I got it at, right here on this breakdown. And it's been down ever since for the most part. We've been making lower lows and lower highs. Now recently, if you look at the hourly chart, we sold off and then we had this little kickback flagging action. This looks like a bear flag. Where essentially you make the flagpole, something like this, then you flag out, and then you continue to the downside. So as of right now, the projected target still stands at the trend line right here at about 502. Looking at the daily chart, you can see that's your longer term bull trend, all right? that we've been in. So again, the trade continues to be that we're going to trade this down to the trend line, cover the short trade down at the bottom of this trend line, and then we'll just watch it at that point and wait for a potential break of the major trend line for a longer term short trade. But for right now, we're just trading it down to the trend line. And you can see we're starting to sell off today. It looks like it's about to continue to the downside. Qualcomm. All right, so Qualcomm, again, big negative divergence on Qualcomm. This is a very clean divergence where price on this daily chart was continuing to move higher. So going back all through December of 2021 and stuff, price was moving higher, kept kind of popping above. This looks like a topping pattern basically, where you just keep kind of spiking above and the divergences are just dropping off. We then broke to the bottom of this channel and we have a gap right here, this big gap. That level falls at about 153.83. We broke the gap, or we entered into the gap, breaking below the 200-day moving average. The last 2 days, they tried to pop it back above, but you can see the first day they popped it above, it still closed below. Yesterday, they popped it above, closed it above the 200, making it look like it had recovered. Today, gap down and selling off. So ultimately, that looks like it was a bull trap, and we should run down to fill this gap as the next level of support. Probably this week, 139.12 is the next level of support. Look for the buyers to probably step in a little early. That's a very obvious gap, so they might step in a little bit early around 141 or so. But in general, this negative divergence was giving us a clue that we're likely heading lower. So we'll probably get a little bounce at this gap, and then we could even bounce all the way back up to the top. And then I think we're actually heading lower. So I'll be probably looking to cover my short trade at or near gap fill, which is right there, and then maybe recycle back in on a bounce. Okay, can't stop, won't stop, GameStop. All right, so GameStop, we are short GameStop. Again, I shorted GameStop, I believe right here on January 6th, the very following day, they came out with some pump news where they talked about going into NFTs, and the thing was up 25%, but technically it still looked like it was about to sell off, and it was pretty obvious that was just some sort of a pump job, and it just sold right off after that news. We then broke the key level of support, which is about 131.84, all right? So you can see all the tags of this. We really tried to hold that area, and it broke. So once it broke, GameStop was on a sell signal, and as it came back up, that was a back test. That was an objective area to add to a short or short it if you haven't done so. And we're continuing down. So I would expect GameStop just a little bit below these lows right here at 93, 94 area. We start to sell off down back into that area. The selling should pretty much intensify, and we should probably just waterfall right down to the next areas of support. We have some potential support right here at about 59. I think it'll be pretty fleeting. And maybe another area of support about this $40 area, up 40 to 45, right in here is probably where you'll get your next intermediate bounce. Okay, semiconductors. One of my favorite shorts right now is the semiconductor sector. And that's why I'm short, Qualcomm and whatnot, and TSM. We'll go through that. But Qualcomm, or the semiconductors, you have this bullish or bearish rising wedge. We broke to the upside. This breakout had negative divergence, big negative divergence, telling me that the probability up here was that we were going to reverse and go lower. Once you entered back into this wedge, it was pretty obvious that you were going to, head to the bottom of the wedge and likely break it. We've then broke the wedge. And we've got this intermediate level of support they've been trying to hold, 433.34. You can see support here. It was support here. So we got, four to five tags. They kind of held it right in here of that support, heading right back down to it today. You can see we're basically at it. So look for that to break, and if you get a break of that, I don't see much in terms of decent support until down really down about here, about 384, 388 down to 384 area is where I see the next level of decent support. So again, these negative divergences were telling me in advance up here that we're likely about to reverse this whole uptrend and start a sustainable downtrend. And I think that's exactly what we started. You can see lower highs, lower lows. You know, it's going to probably look something like that. So we'll continue to watch that, but I do like this as a short trade still. And your next sell signal does come on that break at that 433 area. You get a nice impulsive breakdown. That's your next sell signal. Okay, gold. So gold ran up and it pretty much hit the all-time highs. Not quite. They stepped in a little early. I think gold's probably due for a decent pullback. Now gold, you can see, has just, you know, larger picture. Gold is in a bull market. So let's understand that first. You know, first things first. Clear bull market in gold. We have a double top right now in play. So usually when you see the double top, you'll get an intermediate pullback. I think that pullback is going to be a buying opportunity, and we had this big isometrical triangle right here, so we were compressing. Now coming out of the triangle, we got a very impulsive breakout. So we do have a breakout. It tells me the continuation of the bull trend should continue, but I can easily see us getting a pullback, even potentially to backtest that breakout down at 1840. Okay, if we get that down here, it's probably the most objective buying opportunity you'll have in gold for quite a while. So we'll look for that. I don't know if we're going to get that, but we do clearly have this upward price channel right here, and we could come down and at least at a minimum hit that, maybe undercut it. We'll have to see what's going on, but I am seeing some signs of weakness in the miners. And here's an example, Barrett Gold. Now it's just short-term weakness. Again, I think gold is by the dips, so we're looking for areas to buy. But you can see here on Barrick on this hourly chart, we're marching higher in this upward ascending trend line. Negative divergence on the PPO has been starting to build, and it's there on the RSI as well. We broke the price channel right here. We broke the trend line, kind of backtest, starting to reject. So I could see us correcting a little bit, maybe coming down to this area. This is probably an objective area to buy, 22.18. I would be looking at that as an area of support. Looking at the daily chart, there is always the potential to come all the way down to the original breakout point, all the way back down here at, about 20 bucks. Now that's the same as gold. If you get that, that's going to be most likely the most objective buying opportunity you'll have in this thing for quite a while. So that's obviously a key area of interest. I don't think we'll get that, but I do think we're probably going to pull back to about 22.19. You've had a lot of momentum ripping out of here, and it makes sense to have kind of an intermediate correction in this thing. Oil, so oil looks like it wants to pull back a little bit more. We kind of had a buying peak, I believe, in oil as it was just going parabolic. I think oil at a minimum is going to pull back to this upward trend line. Oil's in a bull market, so it's definitely not something I'm looking to short right now, but I'm keeping an eye out for signs of a short. I don't see it yet, but I could see us pulling back to the trend line, the upward trend line. Right now, that's about 96.50. That's all I see in the charts right now. And here's another sign that we're seeing continue weakness in the market. XLP. This has been one of the areas of strength in the market. This is your consumer staples, your Procter & Gamble, your Coca-Cola, your Costco, just the kind of boring stocks that pay dividends. And in general, a lot of them are, they generate revenue. They're not speculative stocks, but the market is telling us a sign today. XLP, so we have this clear upward price channel on XLP. Up here at the highs, we broke to the upside of the price channel, but that breakout came with negative divergence on the momentum indicators right there. So again, very same setup as what we saw in some of those momentum stocks. We broke down to the bottom of the channel, and you can see this was support right here. We have lots of tags of this trend line. Today, gapping down and selling off, breaking the 200-day moving average, breaking the trend line support, negative divergence telling us that we're going lower. So again, we have a sell signal now in XLP. And again, this was one of the areas of strength. So sector by sector and stock by stock, we continue to break down, and we're breaking key levels. Again, this is just another indication to me that we are entering a bear market. It will be obvious, I think, to the masses when we probably make that next leg lower, which I am expecting. And, you'll hear the media talk about it and talk about where the bottom is, and you'll hear about how horrible things are. Again, we're going to trade this to the short side until we see signs that that's changing. However, there will be an opportunity in the future when everything's completely sold off and, you know, the market's down quite a bit and everybody's extremely bearish. We'll most likely start to see signs of bullishness and probably flip, you know, we'll most likely start to flip bullish on a lot of our trades. So stay tuned for that, but I don't see it yet. That's all I got, guys. Leave me a thumbs up. Check out my stock market technical analysis course if you haven't done so. It's a very good course. It's 99 bucks. Good value there for sure. And that will help you get a skill set that can help you find your own trade ideas and help you get knowledge to how to, you know, really play these markets. Catch you guys on the next one. Bye.